What if I told you getting rich in Canada doesn't require endless hustle or a second job? What if you could actually be lazy and still build significant wealth? Today, I'm revealing a proven method to achieve financial freedom in Canada, not by working harder, but by working smarter, or hardly working at all. Drawing from extensive research into passive wealth accumulation, I've seen how simple shifts can lead to extraordinary financial results. Are you tired of the endless grind, feeling like you have to work harder and harder just to stay afloat? Do you dream of financial freedom but feel overwhelmed by complex investment strategies or the idea of constant hustle? Many Canadians believe the only way to get rich is through grueling work, starting a demanding business, or making risky investments. They're stuck in the time for money trap, trading their most valuable asset, time, for limited income. You might be working 9 to 5 or even longer, yet still feel like you're not getting ahead. Consider this. In 2023, the average Canadian savings account earned less than 1% interest. Your safe money was silently losing purchasing power against inflation, transforming your security into a ticking time bomb. What if there was a truly lazy way to make your money work harder than you ever could, freeing you from this trap? Today, I'm going to reveal the simple, lazy blueprint for building significant wealth in Canada. We'll explore passive income strategies, hands-off investing vehicles like TFSAs, RRSPs, index funds, and ETFs, and how to leverage automation and the power of compound interest to make your money work for you. This isn't about magical shortcuts, but about smart, consistent action. Ready to discover the Canadian lazy rich secret that most people overlook? The first and arguably most crucial step on your lazy rich roadmap isn't about complex financial models or insider trading. It's about a radical shift in your wealth mindset. This isn't about working harder. It's about building systems where your money works for you. The true lazy rich secret for Canadians lies in grasping the profound power of passive income and unleashing the magic of the compound effect. Imagine your finances not as a never-ending chore, but as a finely tuned financial machine, generating wealth on autopilot while you're out living your best Canadian life, whether that's enjoying the Rockies or cottage country. Think about it. Most people are stuck trading hours for dollars. They earn, they spend, and the cycle repeats. The wealthy, however, understand that their money is a powerful employee. It never sleeps, never takes a vacation, and never complains. Picture this. You contribute a relatively small amount regularly, perhaps just a few $100s a month. Thanks to compound interest, which is essentially earning interest on your interest, that small sum doesn't just grow linearly, it balloons into a substantial fortune over time, often without you lifting a finger once it's set up. Your money starts earning money, which then earns more money, creating an ever-expanding snowball effect. Your immediate action today is to eradicate the time for money mindset from your financial vocabulary. Start envisioning a future where your wealth grows autonomously, quietly building your empire in the background. This psychological shift is the critical catalyst, the foundational step to truly breaking free from the traditional grind that keeps so many Canadians stuck. The immense benefit? You unlock the potential for truly exponential growth and achieve liberation from the endless work cycle that drains your energy and limits your dreams. But how do we put this money working for you concept into practice? The answer lies in some often underestimated Canadian wealth engines. For Canadians, the absolute cornerstone of lazy wealth building isn't some offshore account or cryptocurrency gamble.
It lies right here in our incredibly powerful tax-advantaged accounts, the Tax-Free Savings Account, or TFSA, and the Registered Retirement Savings Plan, the RRSP. These aren't just glorified savings accounts, far from it. They are sophisticated wealth machines designed to supercharge your investments by minimizing your tax burden. Let's break it down simply. With the TFSA, any investment growth, whether it's from stocks, ETFs, or mutual funds, is never taxed, not while it's growing, and critically, not when you withdraw it. Imagine paying zero tax on decades of investment gains. It's truly tax-free forever, making it incredibly powerful for both short-term savings goals and long-term wealth accumulation. You put money in, it grows. You take it out, all tax-free. It's the ultimate set it and forget it vehicle for tax efficiency. Then there's the RRSP. While different, it's equally potent. When you contribute to an RRSP, you get an immediate tax deduction in the year you contribute. This means you pay less income tax now. Your investments then grow tax-deferred within the RRSP, meaning you don't pay taxes on the growth until you withdraw the money, typically in retirement. The magic here is that you're often in a lower tax bracket during retirement, so you pay less tax overall. Both are designed for long-term growth, acting as powerful accelerators for your wealth. Your immediate concrete action is this. If you haven't already, open a TFSA and an RRSP today. Don't overthink it. Even if you start with just a few dollars, getting these accounts established is not just crucial, it's foundational. They are the bedrock upon which your lazy rich future will be built. The unparalleled benefit: you maximize your investment growth by dramatically minimizing your tax burden, thereby accelerating your journey to becoming truly lazy rich.
But once these accounts are open, what exactly do you put inside them to ensure they truly work hard for you without you having to lift a finger? Now that your Canadian wealth engines, your TFSAs and RRSPs are primed and ready, the next question for the truly lazy investor is, what exactly do you put in them? The answer, my friends, is simple, elegant, and incredibly effective. Hands-off investing with index funds and exchange-traded funds, or ETFs. These are not about trying to pick the next Apple or Tesla, which requires endless research and constant effort. Instead, they are designed to passively track the overall market, providing broad diversification at incredibly low costs. Think of it this way. Instead of buying shares in one company and constantly worrying if it will succeed or fail, you can buy a single ETF that holds hundreds or even thousands of stocks across an entire market or even the entire global economy. For instance, a broad Canadian equity ETF holds shares in many of Canada's largest companies. This instant diversification significantly reduces your risk, as your fortunes aren't tied to the performance of a single company. You're essentially buying a piece of the entire Canadian economy or the world economy with one simple purchase. And here's the kicker. Decades of academic studies consistently show that passively managed index funds and ETFs often outperform actively managed funds over the long term, all with zero effort on your part. Why? Because active managers charge higher fees and often make poor decisions trying to beat the market, while index funds simply are the market. All this with virtually no active management required. You're not paying for a star fund manager, you're simply riding the wave of global economic growth. Your immediate action is to take a few minutes to research broad market Canadian or global ETFs. Look for well-known options like VGRO or XEQT, popular choices among Canadian investors for their simplicity and diversification. Understand that by buying these, you're not just buying a stock, you're buying a diversified slice of the economy.
The enormous benefit? You gain instant, wide-ranging diversification, pay significantly lower fees, and achieve market-level returns with virtually no active management required. But how do you make even this step feel completely effortless, truly leveraging the lazy approach? For the genuinely lazy Canadian investor, or anyone who finds the idea of choosing ETFs daunting, Robo-Advisors are nothing short of a game changer. This is the ultimate lazy hack. These online platforms completely automate your investing strategy, taking care of virtually everything, from creating a diversified portfolio tailored to your risk tolerance, to automatically rebalancing it as market conditions shift, and even reinvesting any dividends you receive. You simply set it up, fund it, and they do the rest. Imagine this scenario, and this is entirely achievable. You spend just 10 to 15 minutes setting up an account with a Canadian robo-advisor like Wealthsimple or Questrade Portfolios. You link your bank account, answer a few simple questions about your financial goals and risk tolerance, and then, this is the key, you schedule automatic weekly or bi-weekly contributions directly from your checking account. That's it.
From that moment on, the robo-advisor takes over. It automatically invests your money into a globally diversified portfolio of low-cost ETFs, perfectly aligned with your comfort level. If one asset class grows disproportionately, it automatically sells a little of that and buys a little of another to keep your portfolio balanced. If dividends are paid, it reinvests them. You are hands-off, hands-free, and your wealth is building itself in the background without a single thought from you beyond that initial setup. Your immediate action? Sign up for a reputable Canadian robo-advisor. Take 5 minutes to explore their platforms. Then, set up those recurring deposits. This is the most powerful set it and forget it step you can take. The undeniable benefit? Your entire investment process is streamlined and automated, transforming wealth building from a complex chore into something incredibly simple and truly freeing up your valuable time. But what if you want your investments to not just grow, but also pay you income, even while you sleep? Beyond the capital appreciation, the growth in value of your investments, you can also generate consistent income while you sleep through Canadian dividend investing. This strategy is particularly appealing for the lazy rich because it often involves investing in established, stable Canadian companies that have a long history of paying out a portion of their profits to shareholders. Think of Canadian banks, utility companies, or telecommunication giants. These are often known as dividend aristocrats because they consistently pay and often increase their dividends year after year. By investing in these high-quality, reliable dividend-paying stocks, or even lazier, through dividend-focused ETFs, you receive regular cash payouts directly into your investment account. This could be monthly, quarterly, or semi-annually, depending on the investment. The beauty here is twofold. You can choose to reinvest these dividends automatically, often through a dividend reinvestment plan, or DRI. This means your cash payouts are immediately used to buy more shares of the same company or ETF, which then generates even more dividends. This supercharges your compound growth, accelerating your journey to wealth. Alternatively, once your portfolio is large enough, you can choose to take those cash payouts as a steady stream of passive income, supporting your lifestyle without needing to sell your underlying investments. Your immediate action is to consider adding dividend-focused ETFs to your automated portfolio strategy. Look for ETFs that specifically hold a basket of strong, established Canadian dividend payers. This provides diversification within the dividend space, making it a truly hands-off income generator. The profound benefit? You create a consistent, reliable stream of passive income, or you powerfully supercharge your growth through automatic dividend reinvestment, all without needing to actively trade or monitor the market.
So, how do we tie all these lazy strategies together to create your ultimate roadmap and avoid common pitfalls? So, what does this lazy rich roadmap look like when all these powerful strategies are combined? It's elegant in its simplicity, yet incredibly robust. Your roadmap involves leveraging the tax advantages of TFSAs and RRSPs, consistently investing in low-cost, broadly diversified index funds and ETFs, and then supercharging the entire process through automation with a Robo-Advisor.
Layer on top of that the consistent income from Canadian dividend strategies and the unstoppable force of the compound effect, and you have a financial machine designed for long-term, effortless wealth accumulation. A typical diversified, lazy-rich Canadian portfolio managed by a robo-advisor might look something like this. Perhaps 80% invested in broad market ETFs covering global equities and bonds, and 20% allocated to dividend-focused Canadian ETFs. The robo-advisor automatically rebalances this for you, ensuring you stay aligned with your risk tolerance and goals without lifting a finger. This balance allows for significant growth potential while also generating some passive income. But here's a crucial warning. Beware the lazy trap. This isn't about becoming too lazy and completely neglecting your finances. The trap is falling for get-rich-quick schemes, or, more commonly, becoming impatient and trying to time the market. Market timing, trying to buy low and sell high, is a fool's errand that even seasoned professionals consistently fail at. And getting greedy during market bubbles or panicking during downturns will undo years of consistent, effortless progress. The true lazy way is to stay disciplined and consistent. Ride out the inevitable market fluctuations. Your only real job, once set up, is consistency. Consistently contributing, consistently letting time and compound interest do their work. Perhaps an annual brief review of your automated setup is wise, just to ensure your goals haven't changed dramatically. But otherwise, resist the urge to tinker. Ignore the market noise, the headlines screaming about recessions or booms. Stick to your proven plan and let time and compound interest do the heavy lifting for you. Your immediate action? Commit to this consistency. Understand that patience is your most powerful asset. The immense benefit? This disciplined approach ensures long-term success and truly effortless wealth building, leading you directly to the financial freedom you deserve. But every moment you delay is a missed opportunity for your money to start working for you. So what's next? Look, I know it sounds almost too simple to be true. We're so conditioned to believe that wealth requires immense struggle. But the beauty of this lazy rich method is precisely its simplicity. The most demanding work you'll do is that initial setup, opening accounts, choosing a robo-advisor, and setting up automatic contributions. After that, your primary responsibilities are patience and consistency. That's it. Think about the alternative, the endless grind, the constant worry about making ends meet, the feeling that you're always just one paycheck away from financial stress. Every single day you delay starting this process is a day your money isn't working for you. It's a day of missed compounding. Remember this. Fundamental truth. Lasting wealth isn't built by working harder, by burning the midnight oil, or by making risky gambles. It's built by making your money work smarter, by setting up intelligent systems that generate wealth in the background, quietly, consistently, day in and day out. Your journey to true financial freedom here in Canada starts right now. Not with a massive, exhausting effort, but with consistent, automated, and intelligent action. You have the blueprint. The power is in your hands. But before you go, I have a quick challenge for you.
If this comprehensive roadmap to becoming lazy rich in Canada has truly resonated with you, if you're ready to reclaim your time and build effortless wealth, then there are 3 quick things I ask you to do right now. First, hit that like button to help this message reach more Canadians who are tired of the grind. Second, subscribe for more practical, no-nonsense wealth-building strategies delivered right to your feed. And third, and perhaps most importantly, let me know in the comments below, what's the very first lazy step you're going to take today to make your money work for you? Your answer could inspire someone else just starting out. And speaking of the future, imagine a life where your financial security isn't dictated by the next paycheck, but by a robust, automated system humming quietly in the background. Imagine the ultimate freedom to pursue your passions, spend more time with loved ones, travel, or simply relax, knowing your money is working tirelessly to support you. This isn't a fantasy. It's truly within reach for every Canadian who embraces these principles. It begins with a fundamental understanding. Smart, passive financial decisions, implemented consistently over time, are infinitely more powerful and liberating than any amount of endless effort or stressful work. You now have the proven method. You understand the mindset shift, the power of tax-advantaged accounts, the simplicity of index funds and ETFs, the magic of automation with Robo-Advisors, and the steady income potential of Canadian dividends. You also know the crucial traps to avoid. This isn't about being irresponsible. It's about being strategically lazy. It's about leveraging the incredible tools and principles available to create a life of financial abundance on your own terms. Don't wait. Don't fall prey to analysis paralysis or the fear of getting started. Start your lazy rich journey today. Even the smallest, most consistent actions taken now will compound into extraordinary results over time. Your future self, free from the constant financial grind, will profoundly thank you for making your money work so you don't have to. I truly believe in your ability to this. Get started now, and I'll see you in the next video, ready to continue building your financial future.